Good day and warm welcome to Shaped Theory. Today in this video we'll be looking at asset disposals. What is an asset disposal or disposal of fixed assets in accounting? We have to take into account that in this video we are looking at cost-based accounting and not advanced accounting principles where fair value accounting is taken into account. This is part 4 of the balance sheet item series that Shaped Theory is running. Do make sure that you check the other videos relating to this series to make sure that you understand the common items that are in the face of the balance sheet. If you need to read more about this and other accounting related items, please visit our website at www.shapedtheory.com. Please don't forget to also subscribe to our channel and also leave a comment on the comment section after subscribing and tell us if there's any topics that you would like us to cover. Now, let's look at the steps that one can follow in disposal of fixed assets. Step 1 is to determine the cost price of the asset. This is the purchase price of the asset when it was initially bought by the company. Step 2 is the calculation or calculating accumulated depreciation of the asset. This involves taking the prior year accumulated depreciation and adding it to the current year depreciation amount, which will give you the total accumulated depreciation amount for the asset. Step 3 relates to the calculation of the book value or the carrying amount of the asset. Step 4 is determining the proceeds of the asset. This is the amount by which the company is selling or disposing the asset for. Step 5 relates to the calculation of the profit or loss on the sale of the asset. You will see that step 1 to step 3 were covered in the other videos on this series in detail. If you happen not to understand them on this video, please go and check the other videos that we have on this balance sheet item series. Now, the following slides will be looking at all the above steps in detail and showing you an example on how to calculate these above items. Now, let's look at step 1, which is the cost price of the asset. In order for us to understand step 1 and all the other steps carefully, we will go through an example. Now, bear in mind that we will use the same example in all the other steps as well. Therefore, let's say Company A bought an asset for 1,000 in the previous year. The prior year accumulated depreciation of the asset is 200. The depreciation method is straight line method over a period of 5 years. The company decided to sell the asset in October of the current period or current year for an amount of 1,200. The financial year of the company starts from the 1st of January to the 31st of December every year. We need to take note that when calculating depreciation, the financial year is quite important. You will see later in the slides the reason why we say it is important. Now, on this example, we will say the cost price of the asset in step 1 is 1,000 since this is the purchase price of the asset. Let's look at step 2, which is the calculation of the accumulated depreciation. For us to come to the correct accumulated depreciation amount, we will need to determine the previous year accumulated depreciation and the current year depreciation and add these together to come to the total accumulated depreciation of the asset. In this instance, we know that the accumulated depreciation for the prior year is 200. We will therefore need to calculate the current year depreciation and add these to the accumulated depreciation of 200 as mentioned. In the previous slide, we have mentioned that the financial year is very important in calculating depreciation. Please take note on how we use the months of the financial year to make sure that we get to the correct depreciation amount. You will see on the slide that we have plotted a timeline that indicates the financial year of the company, which is a 12-month period from January to December. Now, the asset was sold at the end of October, which is 10 months from the beginning of the financial period. Therefore, in essence, we can say the asset was only utilized for a period of 10 months. This means that the depreciation for the current period should be for 10 months only. Let's look at how we make sure that the depreciation for the current period is for 10 months only. We know that the cost price of the asset is 1,000 and the useful life is 5 years. We will therefore take the cost price of 1,000 and divide it by the useful life of 5 years, which will give us 200. This 200 is for a 12-month period. We therefore will need to apportion this 200 to make it a 10-month amount. As a result, we will take the 200 and divide it by 12 months to get to a monthly amount and multiply that by 10 months, which will give us 167 as a depreciation for the current period or depreciation amount for the 10-month period. If we have to put these in a journal, we will debit the depreciation with 167 and credit the accumulated depreciation with 167. This was covered in detail on the previous videos about depreciation and accumulated depreciation. Please make sure that you check that video as well. Now, the total accumulated depreciation can therefore be calculated as the previous accumulated depreciation of 200 plus the current depreciation of 167, which will give us the total accumulated depreciation of 367. Let's look at step 3. The calculation of the book value or carrying amount of the asset. As said in the previous slide, our cost price is 1,000. Our total accumulated depreciation as calculated in the previous slide is 367. In order to get to our book value or carrying amount, we will therefore say the cost price of 1,000 less the accumulated depreciation of 367, which will give us the carrying amount or book value of 633. Let's look at step 4, which is the proceeds of the asset. This refers to the price that the company has sold the asset for. In this instance, the asset was sold at the end of October for an amount of 1,200. Now, let's go to step 5, where we have to calculate the profit or loss on the sale of the asset. We will need at least 2 items to calculate this. The first item is the proceeds of the asset. The second one is the book value or the carrying amount of the asset. As mentioned, we will therefore calculate the profit on the sale of this asset by taking the proceeds as indicated to be 1,200 and less the book value of the asset as indicated to be 633. This will give us a profit of 567 on the sale of this asset. Now that's it for now, and thank you for watching this video. If you want to understand the journal entries on this asset disposal topic, please check our part 5 video on asset disposal. Please don't forget to subscribe to our channel for more videos like this. And also, please leave your comment on the comment section after subscribing and tell us if there's any topics you would like us to cover. Don't forget to check the other videos relating to the balance sheet items for better understanding of these items. If you want to read more about other finance related topics, please visit our website at www.shapedtheory.com. Thank you. Good day and warm welcome.